Nischal Maheshwari, good morning. Thank you so much for your time. To begin with, expectedly, it's the energy stocks, especially Reliance Industries, which is taking a beating. Where do you see this Russian oil sanctions heading from here? And what could be the overall ramifications on oil markets and then, in turn, even on stock markets?
Morning to you and to your viewers. So difficult to say where these sanctions will head, basically, because this is an ever-changing game. And we are just actually a victim of the whole fallout. We are not a player in the drama, actually.
Right.
So that's why I think we have to be just the takers of whatever happens out there.
Right.
But having said that, I think obviously it's going to be negative for the whole oil marketing companies and the oil refining companies. There is going to be margin challenges, basically, which we are going to see in the coming quarters, at least $1 or $2 as far as the GRMs is concerned for most of the oil refining companies. That is the pressure you will see.
Okay, but should we expect, let's say that the sanctions are here to stay and let's say, India will have to then diversify, as it was stated even by the Ministry of External Affairs, that India is open to diversification of its energy needs. Now, specifically on stocks of Reliance Industries, if these sanctions were to stay, what would your sort of advice be to retail investors who are holding on to Reliance?
So Reliance has long been I think it is already diversified away from the oil and gas. Oil and gas no more. Now it is only 30% of their EBITDA. So I don't see that there is going to be a very big challenge. Now what we are seeing is basically it's not that the oil is not available across the world. It is available basically and but at a slightly higher cost. So that's what I was saying basically, that there is going to be some margin pressure. But otherwise, I think the capacity utilization all will continue.
All right. So no stress really, not at the moment. I also want to talk to you about inflation specifically, Mr. Maheshwari, because oil prices, as we had seen in the beginning of the Russia-Ukraine war, there was pressure on oil prices, and the kind of inflation that the world imported, including India, had been a sticky one. And then, one war led to another war, and overall you had the Middle East also flaring up. So overall, oil prices were, for about 2 years or so, under a lot of stress. Do you see oil prices to come under similar stress this time around also? And should India worry about inflation, or too early to say because oil at $60 a barrel is still pretty lucrative?
So 3 million barrels a day going out of the system, that's definitely going to put a pressure.
Okay.
So world capacity or world utilization, I think, is around 97, 98 million barrels a day. And 3 million barrels going out, it's 3%.
Right.
Saudi and other countries have the capacity to actually fulfill this, but we have to see because it's going to take a bit of time. So in between, you are going to see a bit of flare up in the oil prices. Doesn't seem to be on a very sustainable basis, but in the short term, you might see some run up in prices. Now, as far as India's inflation is concerned, I don't see much of a worry because inflation is anyway going downhill. And if you really look at it, I think the last number printed, if I remember it right, is less than 1%. So doesn't a bit of uptick in that is not going to really impact us.
All right. No concerns, immediate concerns on inflation at the moment is the word coming in. I want to shift focus and look at the FMCG space and, of course, the commentary that we heard from HUL yesterday and the results that we saw of Colgate-Palmolive not looking very promising. In fact, HUL is down about 4% or so. What are you making of the commentary from HUL on its quarterly results, Mr. Maheshwari? And such a negative impact, was that expected on the entire FMCG pack?
I think this is the second or third company. Yesterday, Colgate results are also not good.
Yeah.
So I think we are seeing the impact across the whole FMCG sector. And that's sort of coming together, basically. And we are seeing this kind of pressure on the whole FMCG stocks. But having said that, I think FMCG stocks basically doesn't justify these kind of P's anyway. With a 10-12% kind of growth, how do you justify 50 times P? And there is no visibility. After all, say GST cut, everything, still nobody is saying that we are going to grow 20% from here.
Right.
How do you justify 50 times PE on that? So
All
I
right.
think the whole FMCG sector has to get derated over a period of time.
So do you believe it's just a valuation play, Mr. Maheshwari? Is it just a function of the stocks being too hot and investors now realizing that perhaps with the commentary coming in, with the numbers coming in, it may not actually deliver the kind of growth that investors would have hoped for?
No, I think the investors itself are not hoping for a very high number.
Okay.
So that is the good part. But the current quarter, basically, investors are hoping for some ramp up because of an expectation of the GST cut. But I think that's all going to shift in the third and the fourth quarter now.
Right.
So at least in the short term, I don't see much challenge. But I was talking on a broader sense, basically saying that how do you justify a 50-time valuation for an FMCG company?
All right. So, but do you think Q2 was a good barometer for investors to gauge the performance of FMCG? Because like you said, the GST cuts are going to start taking effect in the numbers of Q3. And of course, India at that time, in any case, was in this flux of tariffs being announced, tariffs being hiked, etc. So all of that would also have, I believe, added some pressure on the operations of these companies. So do you think Q2 for any industry would be a good barometer to judge them for future value potential?
No, I think FMCG companies have nothing to do with the tariffs, basically.
Okay.
So they are totally domestic growth driven. So no challenges as far as tariffs are concerned. Maybe some of their raw materials might be challenged, like oil prices going up. Now that's a second derivative. There is not a first derivative saying that it's got any impact directly from the tariff issue.
All right.
The issue remains to be that the GST got implemented at the end of the quarter,
Right.
and there was disruption in the supply chain because of the pricing issue. And the second thing was, I think some amount of postponement may have happened for consumption also,
All right.
uh, which I think basically very little, because I don't see people postponing their basic needs.
Right.
So but definitely, I think in the third and fourth quarter, you're going to see a ramp up in value in volumes.
All right. So ramp up in volumes expected in Q3 and Q4. And finally, I also want to get a word from you on the IT sector. Yesterday, we saw a massive rally, in fact, led by Infosys. Infosys was up more than 3%, in fact, 3.5% or so. And that sort of had its sort of cascading effect on all other Nifty 50 tech stocks as well. This morning, are we seeing profit booking, or is there something more sinister at play here?
So I think IT is reacting to more what's happening globally. I think there was news about, Mr. Trump and Mr. Putin meeting,
Yeah.
and that overnight got cancelled. I think this is what the reaction is, because I'm saying some issues getting sorted was one of the thought processes.
Okay.
Then obviously there was a chance that Indian tariffs may get cut, and the trade deal will get signed. I think that is a bit of pushed away with all this geopolitical things happening again. So I think the IT industry is reacting to that.
But Mr. Maheshwari, why would the IT sector respond to a trade deal? Because there are no tariffs on services just as yet. Is there going to be a direct impact of trade deal with the IT sector? It's not that India and US trading more goods is going to get US companies to invest more in Indian IT services.
So Indian IT services doesn't require much capex, basically.
Right.
So that issue is not there. The issue was basically, if you are getting sorted out the world issues, growth is going to come back across the world, basically, and it's going to drive the revenues for the IT companies, especially in the US. That was more of a thing. And obviously, if the if the tariff issue gets sorted, I think it's just going to be positive, because you have got some negative, though H1B doesn't have much impact on the companies, but sentimentally it is negative. So I think if these things get sorted out, I think ultimately at least the view about the industry would be a bit positive.
All right, Mr. Nischal Maheshwari, let's leave it at that for this morning. Thank you so much for your input across this array of stocks and sectors.